Almost every adult in America has heard the word stock market. Comes up in the news, in conversations, in movies, in every financial discussion you have ever heard. But here is the honest truth. Most people who hear those words every single day could not actually explain what the stock market is, or how it works, and that lack of understanding keeps millions of people on the outside of one of the most powerful wealth-building tools ever created. Today that changes. By the end of this video, you are going to understand the stock market completely, what it actually is, how it works, why it exists, how people make money from it, and what you need to know before you ever put a single dollar in. Let us start from the very beginning. Let us start with a simple story. Imagine you have a friend, and that friend bakes the most incredible cookies you have ever tasted. Everyone who tries them wants more. The demand is real. The product is great. Your friend wants to turn this into a real business. Open a bakery, hire staff, buy equipment, rent a space. But there is one problem. They do not have enough money to do it alone. So they come up with an idea. They decide to split the business into 1,000 equal pieces and sell those pieces to people who believe in what they are building. Each piece is called a share, and each person who buys a share becomes a part owner of the bakery. If the bakery grows and becomes wildly successful, the value of each share goes up, and everyone who owns a piece benefits. If the bakery struggles, the value of each share goes down, and everyone who owns a piece feels that too. That is the core idea behind a stock. A stock is simply a small piece of ownership in a company, and the stock market is simply the place where those pieces are bought and sold. Now let us zoom out a little. Why does the stock market exist at all? Companies need money to grow. They need money to hire people, to build products, to expand into new markets, to research new ideas, to compete and survive. One of the most powerful ways a company can raise that money is by offering pieces of itself to the public. In return for that money, the public gets ownership and the opportunity to share in the company's success over time. The stock market is essentially the organized system that makes this exchange possible. It is a marketplace, just like any other marketplace, except instead of buying and selling groceries or furniture, people are buying and selling ownership stakes in companies. Now let us talk about how the stock market actually works day to day. Every weekday the stock market opens for trading. Millions of buyers and sellers are constantly making decisions. Some people decide a company is going to grow, so they buy shares. Their demand pushes the price up. Some people decide a company is going to struggle, so they sell their shares. That selling pressure pushes the price down. The price of any stock at any given moment is simply the result of all these buyers and sellers constantly agreeing and disagreeing on what a company is worth. Nothing more complicated than that. Supply and demand applied to pieces of companies. Now here is something important to understand. When you hear people say the stock market went up today, or the stock market crashed, they are usually talking about something called an index. An index is simply a way of measuring how a large group of stocks is performing overall. Think of it like a temperature reading for the economy. Instead of checking every single company individually, an index tracks a representative group of companies and tells you whether things are generally going up or down. The most famous of these in America tracks the largest and most important companies in the country. When that index goes up, it generally means American businesses are growing. Investors are optimistic. The economy feels healthy. When that index goes down, it generally means businesses are facing challenges. Investors are worried. The economy feels uncertain. This is what the news is talking about every time they mention the stock market going up or down. Now let us talk about how people actually make money in the stock market. There are two main ways. The first way is called price appreciation. This simply means the value of your shares goes up over time. If you buy a share of a company today, and that company grows and becomes more valuable over the years, your share is worth more than you paid for it. When you eventually sell that share, you pocket the difference. That profit is yours. The second way is called dividends. Some companies share a portion of their profits directly with shareholders. These regular payments are called dividends. So even without selling your shares, you can receive regular income just from owning them. Think of it like owning a rental property. The property value might go up over time. That is appreciation. And the monthly rent you collect is like dividends, income just from ownership. both of these working together over time, is how ordinary people have quietly built extraordinary wealth through the stock market. Now let us talk about something that stops most people from ever getting started. Fear. The stock market goes up, and it goes down, sometimes dramatically, and for someone watching from the outside, those drops look terrifying. But here is what history consistently shows. About every single major drop the stock market has ever experienced, it recovered, every time, without exception. Sometimes it took months, sometimes it took years, but it always came back higher. The people who lost money permanently were almost always the ones who panicked during the drop, who sold everything when prices were low, and locked in their losses. The people who stayed calm, who understood that drops are a normal part of the process, who simply held on and waited, came out significantly better on the other side. Every single time in history, this does not mean the stock market is risk-free. It is not. Individual companies can fail completely. That is why smart investors never put everything into one company. But when you invest across many companies, across many industries, the overall direction over long periods of time has always been upward, not in a straight line, but upward. Now let us talk about the difference between investing and speculation, because this confusion costs a lot of people a lot of money. Investing is buying ownership in real businesses, with the intention of holding for years or decades, letting those businesses grow, and sharing in that growth over time. Speculation is trying to predict short-term price movements, buying something because you think the price will jump quickly, and selling it for a fast profit. Speculation is essentially gambling, and most people who try it lose money. Investing is patient, boring even, but over time it is one of the most reliable ways to build real wealth. The most successful investors in history are not the ones who made the cleverest trades. They are the ones who found great companies and held them for a very long time. Patience is the real edge in the stock market. Not intelligence, not timing, not luck, patience. Now let me give you the most important things to understand before you ever invest in the stock market. The first thing is to only invest money you do not need in the short term. The stock market goes up and down. If you invest money you might need next month, you might be forced to sell at exactly the wrong time. Only invest money you can leave alone for years. The second thing is to spread your risk. Never put all your money into one company, or even one industry. The safest and most proven approach for most regular investors is to own a little piece of a very large number of companies, all at once, through something called an index fund, which we have already covered in a previous video. The third thing is to ignore the noise. The news about the stock market is almost always dramatic. Markets crashing, bubbles forming, crashes coming. Most of that noise is not useful to a long-term investor. In fact, most of it is actively harmful, because it triggers emotional reactions that lead to bad decisions. The fourth thing is to be patient. The stock market rewards people who wait, not people who rush. Time is the most powerful force available to any investor, and it is available to everyone equally. Here is the simple truth about the stock market. It is not a casino. It is not just for wealthy people. It is not something that requires special knowledge or connections. It is a system that allows regular everyday people to own small pieces of the most successful companies in the world, and to share in the growth of those companies over time. It has created more wealth for ordinary Americans than almost any other tool in financial history, not because of luck, not because of timing, but because of patient ownership over time. Now you understand it. What you do with that understanding is up to you. If this finally made the stock market make sense to you, hit that like button. Every single week we go deeper into the truth behind money. The real stuff nobody teaches you. The stuff that actually changes how you think and how you live. Subscribe and come back next week. I will see you there.